Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, September 8th, 2008. Well, we came back from the weekend to a monstrous rally in Wall Street, folks, and what we saw today was the Freddie Mac and Fannie Mae basically bailout news taking the markets by full force today as the whole economy seemed to get a little bit of a lift. All stocks got a lift. And what was the reasoning behind this? I want to look at that today. I also want to focus it on the charts. And the crazy thing, and I want to focus on this as well, is you guys are seeing now our calls in full force coming through. What do I mean by that? Well, if you guys go back a week in the videos, even more than a week, we talked about this week being a key early in the week, especially watching for a big rally in the market, or at least a bid in the market to come in. And sure enough, you can go back in the videos and confirm it. Go back, 3, 5, 6 videos. We had been talking about this for multiple videos, having done our calculations, and it was pointing to a little bit of a bid coming in the market, a rally coming in the market this week, at least initially in the early part of the week. And, many people last week, especially after Thursday's debacle and midday through Friday when the market was getting just absolutely crushed, I could understand why people would say, well, how do you expect that next week? Here the markets are literally getting beaten down. But we saw key indicators. I'm going to go over this today. We didn't confirm a sell-off on Friday. We actually closed strong. And all of a sudden, like out of the blue mist here, you see the rally in the markets take effect today, and the markets shoot up. You saw the Dow up about 290 points, the Nasdaq up 14, and the S&P up about 25.5. For the Dow and the S&P, that's about 2% plus, and the Nasdaq was a little weaker, just up about a little over 0.5%. Now, the point here, folks, is this, is that we're obviously upping our new website very soon, and you guys are going to want to come watch the videos on the website, and obviously, we hope you come and join us and continue with us, and I hope our track record has fully convinced you guys to follow us all the way to our new website off of YouTube as we continue, and I really do hope that you all spread the word. I mean, we do not do any advertising. I'll be flat out and honest with you guys, and we don't do any advertising. No dollars are spent on advertising. We put all our dollars to work on trying to figure out what this market is worth, where this market is going, and so I hope you do all follow with us. In any case, let's get right into it now. Enough of that little spiel as we look for basically going, and I want to start out with this right before we get into the intraday video, what we're going to look for the rest of this week, and that is this. Keep an eye on the market over the next day or so for consolidation, maybe a little up, maybe a little down. You're going to really focus in on, maybe after this big move, and especially off of the lows from Friday, we've now had quite a move. I mean, it's been a big move. So you want to look for that little bit of consolidation, that little pause possibly, and then we do now that we've regained a couple key levels. As long as those levels hold, you look for continued upside, okay? So we'll go over those levels as well in the video, but let's get right into it. And you can see here initially, this was an unbelievably volatile day in the market. Alright, there's no other way to describe it. I talked about Friday being a volatile day. This one takes the cake, guys. I hate to say it, but this one takes the cake. Here you have the markets gapping up insanely here. Alright, the markets pre-market were trading all the way up here. Alright, the Dow was up over 300. The Nasdaq was up 30 to 40 points. The S&P was just up tremendously. And the market opens and all of a sudden we start to sell. And the market sells, bounces, sells hard, bounces, sells hard again. You see a little bit of a base forming here. Alright, so you have support right in this range. And then you have another rally up to the 20 moving average. That's, the first hit of the 20, right? Going all the way back up to pretty much the morning where you were at it right here. So you didn't hit it here. Here's your first hit. That's a shorting opportunity. Back down to support. So you cover at support. The next hit could go through, so it does. Pulls back. Again, a higher high here. Also a buying opportunity, and the markets were able to rally into the close. So what you're seeing here, guys, is a classic case of support and resistance playing right here. And I want to show you that here. You can see there's a little bit of a channel being formed, bouncing up and down off the channels. The supports were holding, the resistances were holding all the way across until you finally hit it about 3 times. You can really count this as 1, 2, 3. On the 4th hit, blast off right through, guys, alright? And we were able to close pretty strong. But nonetheless, just note something too. The market earlier in the day was not that pretty. I mean, we almost went to the flat line on many of these indexes. In fact, the Nasdaq was at one point down about 15 to 20 points. So just the fact that that was able to push up into the close is a bullish sign. We looked for a close above 1260 on the S&P to confirm this up move. That was a key level that we regained today, okay? So watch that 1260 level on the S&P. I'm going to go to the daily chart of the SPY now and really focus more on the daily, because remember last week when we had talked about this channel, and this is all going back to past video stuff, and again, just the consistency of the correctness of the videos, I really hope is noticed here. You can see this breakdown level we talked about, the channel that the market was in, okay? And we said watch for a breakdown. If you break down, you have to confirm it. So here's the breakdown day. It was Thursday, right? Thursday broke us down, and then we said on Thursday night's video, we're not sold on this sell-off yet. We still had it penciled in for a rally come this week. Well, we said as of last week it was next week, but it was really starting today. And we said just be careful because we don't think we're necessarily going to confirm this. Sure enough, the next day, it looked like we were going to confirm as we traded all the way down here, but before the close, you rallied to close above the low, didn't confirm the move, and then Monday comes, and look at where we are. Right back into the channel. How crazy is that? I mean, just look at the craziness of that situation. Look at how if you didn't follow the videos, or if you didn't know technical analysis, or if you didn't use proprietary analysis like we're using, you'd be fooled there. I mean, a no-brainer here. You broke out of the channel. All the amateurs, all the weak hands out there, oh, this is market's going to dump. Maybe we get a little retrace, which we got Friday. We'll short it right there, and then look for a more downside. No. Boom. Right back into the channel. You didn't get the right confirmation signals for a breakdown. The market, according to our proprietary analysis, was not showing that we were going to break down there. Now, again, later in the week, could it happen? Yeah, we had it penciled in here for the first couple days of the week to get a bid in this market. We still think you're going to see maybe consolidation, maybe a small pullback off today's monster move, and then maybe a retrace higher. It's a little hazy right now. We're going to really focus in and crunch the numbers tonight, and we'll show you all those in tomorrow's video. But in any case, right back into the channel. So now let's talk support and resistances again, because what you have here is number one, support right here. The old trend line, which was support here, then it broke, became resistance. We broke above it again. Now it's support. Now you also have this point right here as being key, and down here as being key again, and ultimately the low from Friday would obviously be the ultimate support line on the downside. We break that one, and then definitely you'll see the bottom line here from July, the lows from July hit. All right, so right down you're seeing support, really support 1, support 2, support 3, support 4, support 5 on the daily chart. On the upside, the highs of today are going to be resistance. Notice how the highs of today hit the 20 moving average on the intraday, on the daily chart. So again, highs are coinciding with a technical point. Obviously, as a trader, you're going to be selling right there. You see the market open right on the 20 moving average. Generally, you're taking profits. We were able to take some profits in the chat room, and it was a nice one there. All right. Now, the key on the upside is, well, should we consolidate here and maybe break further up? Then you're looking at the top end of that channel as being the next resistance. When we get there, then we'll talk about if it should break to the upside. That'll be a whole new scenario that we'll follow. Now, the other thing is, notice the volume, guys. This volume has been intense the last few days. Absolutely monstrous. Keep a watch of that volume. All right. Definitely the fact that we were able to rally up today on heavy volume is a bullish sign. The markets did not close at the highs. They closed off the highs, but off the lows as well. And we'll flip back to the intraday chart. You can see we opened here. You sold off here, but you created a nice little base. We showed this on the intraday ES. This is the SPY intraday. And you're able to rally off the lows to close here. So it wasn't at the highs, but it wasn't exactly at the lows either. Kind of in that middle range, and we think that that'll probably set up for some consolidation. All right. The next key levels on the S&P, watch for 1275. All right. On the upside, that's going to be major resistance, and we'll come out with the other supports tomorrow in the video. Now, I really want to touch on the NASDAQ because the NASDAQ continues to be weak. Remember last week when we were talking about the weaker indexes, we saw more of a bid coming in on the S&P and the Dow all week long, and the NASDAQ was always lagging. So we're going to flip to the daily NASDAQ chart, and you can really see the sell-off that this thing has had from the high here. All right, and we had called this to the day right here for the sell-off, and you can see again, it didn't confirm the move down, but it was a lot closer than the other indexes. And the little bounce today, it got a nice little bounce, but it really closed off the highs as well, only up 13.5 points to 14 points. Now, the key here, guys, is there are stocks in the NASDAQ or in the Qs, the QQQQ, which are just not catching a bid. Google today down $24. Apple today down $2.25. RIM down $4. And these were down much more earlier in the day. But that's the key there, folks, is that you're having a lot of trouble. It really looks like the slowing economy is now taking on these issues, all right? The technology plays are really worried about their earnings potential, and you're seeing that in the stocks like Google, you're seeing it in Apple, RIM, and a lot of other ones. So keep that in mind. Technology remains the weak area here, all right? Now, that could change and eventually it will. We'll try and look for signals when that'll change again, but for now, that is the way it is, and you have to face it. All right? Goldman Sachs today, very strong. We all know that's a leader in the market. You can see here, and the beauty of this chart here, this is the daily Goldman Sachs chart, is that you actually had a little bit of a bullish flag pattern formation. All right? You had a hard sell-off on Goldman right to support. Note the support line on Goldman. Perfect buying opportunity for a bounce as it's hitting double bottom support. You have a bounce right to the 20 moving average, bull flag consolidation, blast off to the 50 moving average, and that's where you obviously take profits if you're a quick swing trader, overnight type player. All right, so keep that in mind, guys. The charts are telling us beautifully right now. The calls continue to come out. The new website will be up in about a week or so, give or take. Everything will be available on our website, including new products, new services, CEO Corner, Technical Tactic of the Month, Swing Trade, Hidden Gems, you name it. They're all going to be there. We encourage you to come join the chat room as well. The chat room's a fun place, I got to tell you. More learning is done in there than probably anywhere else. It's probably the least expensive place to learn as much as you can learn in that chat room as well. Have a wonderful day. We'll talk to you soon. Take care, guys.